Hey folks, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, October 23, 2018. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. So we have a lot to discuss tonight, obviously. A lot happened today. There's a lot to discuss in terms of, do we have a bottom? Is this a reversal day? There's a lot going on. I'm going to break it down to other charts. I'm going to show you the intraday 10-minute chart. I'm going to show you exactly where it was game on, and that everybody that's taken the course at Lazy E Mini Trader should have been able to hop on the market for the ride higher. It was right there, teed up, tee it high, and let it fly. It was right there in front of us. I'm going to show it on the charts in a few minutes. And then we'll talk about the larger picture. Is the low in? Are there lower lows? What's going to happen from here? What's the short and the long view? We'll go over everything. Before we get going, let me thank everybody for continuing to make comments and posts underneath the video each and every night. It's important to the entire community. They're helpful comments. Please continue to do so. Please keep up the great work. In addition, please hit the like button on the video and share the video with anybody that you think can benefit from this information. Okay, so here's the daily chart. We made a lower low and we reversed higher. State the obvious. Is this it? Is that all she wrote? Does that satisfy the need? Is this where the market makes a turn and we rally for several weeks to come, maybe even slightly longer? Good question. Let's go over the evidence. Let's pick apart exactly what we have, and then we'll kind of come back and see if we can draw the highest probability conclusion that we can. We made a lower low. Check that off the list. That was somewhat of a requirement in my mind. Okay, fair enough. Did we go low enough is the next question, and my answer to that is I really would have liked to seen the market go lower. So my near-term answer is no, I don't really think we went low enough. Okay, fair enough. Those are both puzzle pieces. We'll put them on the table. Did we have a reversal day? We certainly did. It is a reversal. That doesn't mean the market can't come back down, but we have to take it at face value. It was a reversal day. It was quite impressive. We'll take a look at some other charts in a moment. What about volume? Where do we stand in terms of volume? So we did have higher volume than yesterday. We had higher volume than the prior day and even before that, but we didn't have tremendous volume. Is that an issue? Well, it's not a tremendous issue. It doesn't have to happen, but it certainly is nice when a reversal day is accompanied by volume. It really gives you further evidence, further clue that it's a bona fide reversal day. So you see what I'm getting at is we can have a reversal, but this particular day didn't necessarily have all the components where I'm necessarily convinced that the bottom is in. Let me give you another little piece of evidence. Not necessarily that it's a big deal, but it's something that caught my eye. I consider it somewhat important, so I'm putting it on the table as a puzzle piece. So here the market rallies up, and it looks like it filled this gap, right? So in my book, the gap is filled when we reach the body of the candle that leaves the open gap. So that particular number happens to be 275.01. Today's high happens to be 274.87. So we come up short by 14 cents of filling the gap in my book. Now, to the naked eye, that may not seem like that big of a deal, but the way I look at it is, it seems to me like weakness. Let me show you further what I'm talking about on an hourly chart. Here's the 60-minute chart, and you can see where the first candle of the day, we gapped down, we bottomed, and then the next several candles were up, and we went to fill the gap, but we never actually filled the gap. I find that somewhat suspect. Now, maybe it's a trick, trap, fool, and frustrate. Maybe they'll gap above it tomorrow, and it'll be a gap and go. That's certainly possible, but I'm just saying it's important to me. I'm putting it as a puzzle piece on the table. I'm not 100% convinced that the lows are in just yet. Here's an intraday 10-minute chart, and before I mentioned there was an obvious point in which a trader that understands from what's taught in the course at Lazy E-mini Trader, it should have been apparent what we were looking for and where a trade was available to the long side, where the probabilities were in your favor, and where you would have been wrong extremely small and quickly. Right here, from a visual perspective, I can identify 3 reasons why there was a long trade right here with minimal risk, high reward. This is something that's right out of the course at lazyeMiniTrader.com. Back to the daily chart. So what do we do with this situation? So let me explain what I'm looking at in the bigger picture. So, of course, you can trade long against today's low. That's certainly possible. Do I think we're going to come down, at least do a retest, potentially even make lower lows? I do think that's a possibility. I'm not convinced the lows are in. However, I am convinced we're close. I've been saying for quite some time, we're making a bottom. This is a process. It's a bottoming process. This is how bottoms are made. Large swings in both directions. Everybody's going to get bearish. Bottom's going to be made. And the easy money is made right up front out of the chute. But what you have to realize is you don't have to be in the index to make big money. You don't have to be in the Spider. You don't have to be in the triple Qs or the IWM. We'll get to all those in a moment. But a lot of the big money is made in trading stocks. There are stocks that are absolutely beaten down, taken behind the woodshed. They've been clobbered beyond belief. These are the vehicles that we can use to make a lot of money. Let me give you an example of something that I am in. Now, I'm not suggesting that anybody do anything with this particular company. Whatever you do is on your own. I'm just showing you something I did, and I'm going to explain why. The objective is to give you an idea of what you could be looking for. There is an endless supply of opportunity out there right now. NXP Semiconductor, NXPI. So I'm in this particular company, and today it looks like we've put in a reversal day. That's from a visual perspective what I see. But let me take it a step or two further. This is a weekly chart. Look what's happened to NXPI. It's been absolutely creamed. It will find low. Obviously, I have reasons why I like this particular price area. Now you can see on the weekly chart, it looks like it wants to put in a low. Unfortunately, we're too early in the week to say that's a definitive low being put in from a weekly chart perspective, but let's see what happens as the week develops. I would like to see NXP close above $78 this week. That would tell me that a low is in and we're off to the races. There could be significantly higher prices if I'm right and a low is in, but there has to be an if to the story. Any close below this week's low, right, which is already down at $74.02, then you have lower prices coming and we have to reevaluate and readjust. So right now, as far as I'm concerned, I'm going to use on a daily close $74, any close below $74, and I'm going to move out, most likely reevaluate the trade, most likely get back into the trade, but that's my risk today. Here's a monthly chart. Now, we can't trade off a monthly chart because they take too long to develop. However, traders that have taken my course understand what I'm looking at here and why this trade or why this particular price area was of importance and therefore of interest to me in order to get in NXPI on the long side. And here's a look at the hourly chart. If we have a little bit more consolidation sideways, maybe we could be building energy for another push higher. But you can see here, any close below this low, and there's likely lower prices coming, and I'll likely have to sell the position, reevaluate at that time. I know my risk, but I'm just trying to give you an example of the type of opportunities that I'm looking for in a market like this. When things get thrown out with the bathwater, you want to look for opportunity where you're going to get the biggest bang for your buck. Where's the largest snapback going to be? It's not necessarily going to be in the index. You're going to get a snapback in the index, of course, but some of these stocks are going to give you even more, exponentially more bang for the buck. And there's more. This is just one example. Moving the conversation over to the IWM, you can see here that we have a similar type of arrangement in the IWM that we have in the spider chart. We had more of a fade at the end of the day in the IWM than we did in the spider. That means that really at the end of the day, the market sold off more in the IWM than it did in the SPY, and also we did not fill the gap, the same type of gap that we talked about in the SPY. We also came up just short in the IWM. To me, that's more of a sign of weakness than anything else. In retrospect, when you think about what the market was doing during the day, and we were going higher and higher and higher, and it looked like a relief rally, and it was in part a short covering rally, the logical thing, at least for me, for the market to do would be to complete the effort and fill the gap. And when they couldn't do that, I was kind of scratching my head a little bit, and I did take it as a sign of weakness when I saw that in the IWM and the SPY. That's a puzzle piece. Now, from a longer-term perspective, when you look at the weekly chart of the IWM, you can see here that we did finally come in and spike through the 100-week moving average. I think that's important. Does it mean that we have to go down and retest that? Do we have to go lower than that? No. I think it's important that we hit it. I think it's important that we spike through it. It can hold. That's okay. We're oversold in the IWM. That doesn't mean we can't go lower, but we're closer to a low than we're not. At least that's my current take in the market. So I'm willing to trickle in to some areas where I think there's opportunity. When the market's putting in a bottom, what you'll also see is certain stocks outperform the market. You may even see a down day in the market, but at the same time, you may see stocks up on the day. That's relative strength. When you see relative strength, that's the market's way of indicating something to you. Stocks that may put in a reversal before the market puts in a reversal, that may be indicating something to you. We looked at that example or those examples in some of the names resident from China. We looked at Alibaba, we looked at Sina, we looked at Baidu. Tonight we looked at NXPI. Money shifts not necessarily all at the same time. You have to uncover the hidden gems. You have to look for the opportunities. You have to know what you're looking for. In order to know what you're looking for, at least from my perspective, it's the things that we teach in the course at Lazy E-mini Trader. Back to the daily chart of the IWM. If this isn't a low, we're certainly close. We may go lower, but we're close to a low. It's not out of the question to see increased volatility for the next several days in the market. Big swings in both directions are still likely and probable. The transports. So it looks like a bottoming tail, but I'm not really going to call it a bottoming tail. I'm not sold on the volume. I'm not sold on the finish. I don't like the finish. I would have liked to seen this finish at the top end of today's range. That would look different to me. I don't like the close. I'm not buying the story. That's not a low in my book. Maybe all we do in some of these markets is retrace a portion of today's low and go from there. That's certainly possible, but I'm just not buying the story that it's off to the races. Here are the Qs. Now this is interesting. We don't make a lower low in the Qs. We make a higher low. Is that a sign of strength? Are the Qs going to take off? Is this the market's way of telling us that money is flowing into technology, things weren't as bad as they thought they were, and we should buy technology, buy the Qs, buy into the underlying names in the Qs, buy the IWM, because money's going to go back to risk assets. We made a higher low. It's certainly possible for now, but keep in mind a couple of things. Even if the market rallies from here, that's fine. What we'll have our eye on is what happens when the Qs get up to here. What happens at the moving averages at that time? What happens up here at the high of that breakdown candle? That will be interesting to see what happens when the Qs, if the Qs get up to that level. Think about it for a second. We closed the day here about 173. That's all the way up about 178.5. That's a long way off from where we are. I'm not saying we get there tomorrow, and I'm not saying we get there anytime soon, but I do find it interesting that we did put in a higher low. You have to respect it from that perspective when looking at the Qs. Just always keep in the back of your mind, is it a trick, trap, fool, and frustrate? And do we turn back down around and open the trap door? We'll see. One thing I can tell you is that if the Qs are making a lower low at some point in time, for example, tomorrow, the following day, if we see a turnaround and the market's headed back down, if the Qs are making a lower low, then all the other markets are making lower lows, and we have to look to some of the prices that we've discussed before. The financials, we'll start with the broker-dealers, and does this look like a definitive low to anybody? And to me, it just looks like a continuing downtrend. I can't see it another way. Now look at the XLF. It's an interesting type of candle or look in the XLF. It looks like the spiders. It looks like a reversal. We didn't fill the gap. We didn't finish on the highs. Let me show you something else because it relates to something we discussed in last night's video. Look at that line at $25. Now, we came pretty close today. The low today was $25.42. Had we got down to $25, I think they would have sold me in taking a position in the XLF. Just a little bit lower, a spike through 25, and I think the XLF represents a very, very good risk-reward scenario. How about the SOX? The SMH, which is the exchange-traded fund that represents the Philadelphia Semiconductor Index. Now, that's a reversal. We did fill the gap. That's strength. I like that look. Does anybody know what NXPI is? NXPI is a semiconductor stock. Any reason why I might have selected NXPI, knowing how the semiconductor index or the SMH was performing? Do you think there's any method to the madness, any rhyme or reason why? Of course there is. I'm giving you what might seem obvious to some and a secret sauce to others. That's the way it works. I'm prepared to be wrong for a few days. I know where I'm wrong. I understand the market's going to be volatile. I bought a portion of a position. I'm completely planning to buy more stuff. This is where money is made, folks. When everybody's running for the hills and everybody thinks that a crash is coming, even if the market goes down another 50, 75 handles in the S&P, we're finding a low. At least that's my take, and take it for what it's worth. Looking over at some of the stocks just to see what's going on with the fan favorites, here's a daily chart of Amazon. Now, you can see that we never came below the low that was made all the way back on the 11th of October. So is this trying to tell us something? Is Amazon making a low, and you can see it trying here to really get back above some important price levels? So potentially this chart could be telling us something. Not making a lower low, I think, is important. I think Amazon is certainly a good representation throughout the tech sector these days. It's a fan favorite. It's one of the widest held stocks out there. Apple, what's going on in Apple? Pretty nice looking candle today in Apple. Is that a reversal day? Well, we're still inside of this breakdown candle, but it's certainly a good start, trading right up into and closing near the highs of the day, but right up into the 20-period moving average. So certainly a positive day for Apple. If Apple was down $3, $4, $5 today, we may be having a different conversation, but this is a positive day for Apple. The market looks like it's starting to shift. This is what my eyes are telling me. Facebook down 25 cents, but look at the type of reversal that it put in, finishing near the highs of the day. Not bad for Facebook. How about Netflix? Ended up $3. Look at this type of reversal. So not to say these stocks can't retest the lows, retrace a portion of today's move, even make lower lows, but this is telling you that money is willing to shift. Money is beginning to shift. Folks, we're looking for a low. This is the way it works. Google, good day, good looking day, but not out of the woods. Still a bearish pattern below all the moving averages. So while it was a positive day all in all, good looking day on the chart, good reversal day, finishing near the highs of the days, it's still a bearish chart from the daily perspective. We need to keep that in mind. We're going to find a lot of overhead resistance at the moving averages, even at this breakdown candle high that comes in right around $1,132. Baidu, this morning we make a lower low, we reverse, we never close below that low. That's a positive, but still, this is teetering. It's in a troubled area, but it's trying. It needs time. Stocks like these are beaten up. Look at how much this stock is down from the high in May. It was $285 in May. It's $193 today. It's beaten down. You're going to get a snapback. Any trader that's taken the course knows exactly what I'm looking at on this weekly chart and exactly why I'm showing it to you. You know where you're wrong? Your risk is maybe $5 or $6 on almost a $200 stock. I would say that's pretty good. Baba, never made new lows. Looks pretty good. It's trying. Look at the weekly chart. Look how beaten down this is. When it snapped back, where's it going? Is it feasible if you give it enough time to get back to 160, 165? Of course it is. It can go higher than that. If it was down 60 or 65 or $66 in a few months, in like 4 months, then why can't it be up 15 on a snapback? And the answer is, it can. I don't know that it will, but it certainly can. Cena, here's another one. Beaten down. This is where money is made. Switching gears, going over to the gold chart, you can see gold tried to break out a little bit. We didn't quite get to 1250. Let me just slide this over and we'll see what the high of the day was. It was $1,243 an ounce in gold today. Right now, they probably have on, quote unquote, the fear trade in gold. But I would say gold's going to get up to the 1250 area. And if that's the case, and we have the fear trade on, does that mean that we do have another leg down in the market, or at least some kind of a retracement and gold going higher at the same time? Certainly possible. I don't want to marry markets together. You know I don't like to do that, but I'm just bringing it out for discussion purposes. How about crude oil? Crude oil got taken out behind the woodshed today. Now, we talked last night about 66.5, I believe. We were looking at this level down here, 67. Maybe I said 66.5, but I know I was looking down here, and it actually cut through there right to 200 period moving average. Down almost 5%. That's really a hammering for crude oil. That generally coincides with some kind of discussion about the economy isn't as good as people think it is, and that's why the market's down, and that's why crude oil's down. I don't really know what they were discussing. I have no idea. I've just read that book several times before. But what I can tell you is, with an election coming up in a couple of weeks, if the Republicans have anything to do about it, they would like lower oil prices. Right? They don't want to be the cause of kind of a hidden tax, if you will. Higher oil prices cost us more money. So lower oil prices are good for the consumer. Sometimes we get skewed thinking when we hear discussions about the market because the analysts out there and the talking heads, if you will, on TV, they like higher oil prices. They think it's bullish for everything, but they lose sight of the fact that higher oil prices are bad for everybody except energy companies. It's just one of those things when you hear them discuss that higher oil prices are good, you kind of shake your head and wonder if they're only saying it because they heard somebody else say it who they think is smart. Moral of the story, think for yourself. And with that, folks, that is a pretty good break and an area to wrap it tonight. I'm David Frost, my strategic forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.